Hi everyone, welcome to this time scrolling finance. While China's bonds market fluctuated around the well-valued yields last week, PMI data came out, but which didn't have an obvious impact. News has come and gone through the market, barely left its footprints. So, as always, let's have a good outline of the bonds market, then check out details part, alright? Total bond yields curve was almost at the same position and stepped a little compared to last week. Yields of 3, 5, 10 years terms went down 1.4, 1.36, and 0.3 basis points. Yield of 30 years term went up 0.2 basis points. If we compare to the one of December 9th last year, the curve was still twisted and flat. Yields of 3, 5, 10, and 30 years terms went down 0.5, 9, 27, and 26 basis points. The spread between Chinese treasury bonds and commercial bank perpetual bonds decreased, with 5-year spread was 41 basis points. About the actions of investment agencies for short and middle-term bonds, big banks and policy banks bought 70 billion yuan together. City commercial banks sold 56 billion yuan. And for long and ultra-long-term bonds, funds bought 30 billion yuan, whereas securities companies sold 22 billion yuan. Next, let's check out details part and see what happened last week. In terms of fundamentals, PMI data came out last week. Manufacturing PMI and the Caixin manufacturing PMI were 49.7 and 50.4, which were all better than previous one, and the Caixin one was above the prosperity line 50. For this, we can see that China's economy is on its way to recovery due to the following reasons. The consumer goods trading programs keep stimulating consumption. Some alleviation happened to the intense relationship between China and the US. And a sufficient backup policy toolkit from the government also provides some confidence. Besides, China's stocks market performed well last week. The SSE Composite Index has been above 3,400 for almost 10 days and reached a new maximum. If we put these two things together, we have a conclusion that China's fundamentals are getting better, and the recovery trend shows itself from the obscure side to the obvious side gradually. So from long and ultra-long-term view, we have to have some sense of defense. The prosperous fundamentals may leave some shadows to China's bonds market. For funding conditions, the PBOC squeezed 1.37 trillion yuan liquidity last week, but the financing price for non-banking agencies kept at a low position, which was around 1.4%, went down a big step. Besides, the PBOC didn't have treasury bonds purchasing in June. Our central bank seems to follow a pattern of squeezing liquidity in the first several weeks of a month, then generously investing back to the interbank market in the rest of the weeks. Thus, from short and middle-term view, the attitude of the PBOC to the bonds market keeps loose, so we can still have some short and middle-term bonds as a safe base position of our portfolio. So what should we pay our attention next? First, economic data and financial data will be released next week. Watch out and verify how good China's economy is. Second, actions of the PBOC, mostly the situation of the treasury bonds purchasing, which is a crucial factor leading to the next stage of the bonds market. Third, July 9th is the deadline of the discounted reciprocal tariff. Although China and America had a good arrangement in London, and I surely hope the relationship between China and the US continue to improve. But if we consider the unstable character of Trump, well, never say never. About bond investment strategies, we should cut portions of long and ultra-long-term bonds to defend, for the macro environment may change quietly. But the loose funding condition is still out there, thus keeping 40% of our position is necessary. Perhaps we should rebalance the duration and the DV1 of our portfolio, exchange some long and ultra-long-term end with short and middle-term end and keep the same DV1. So as always, if you want to know more useful financing information about the Chinese bonds market and the economic situation, please like, share, and subscribe. I will always be here, share my understanding and experience and waiting for you. So bye guys, until next time.